Well, good afternoon, everybody, and thank you for giving me 45 minutes in the middle of your quarter close, your recovery season, which, as you'll see, is rather the point of this session. I'm Ferdinand Roberts, the CEO of Asset Class, and today I'm seeking to provide some insight into the ways in which investor relations is being impacted by, and in many cases, helped by AI. We'll be looking at worked examples of what embedding AI into the day-to-day jobs of private capital firms actually looks like and tackling questions that we hear in the market every day. Everything here is vendor neutral in principle. You can apply it with us, with someone else, or with tools that you build yourselves. The title is deliberately provocative, and I'll give you my honest answer to it on slide 9, so please stay with me at least until then. So let's dive in. A little bit of background on asset class and our credentials. It's not to sell, but just so you know where today's observations come from. Asset Class was founded in 2019. I'm the founder. We built the fund operating system for private capital, and we deliver AI software and services embedded inside it. We work with more than 900 funds globally, representing $1.2 trillion in assets under management around the globe, with GPs, venture firms, fund administrators, family offices, RIAs, etc. Most of them exactly the size and shape of the firms on this call. That footprint matters for one reason. Everything I share today comes from watching these firms, these real firms, adopt, stall, and succeed at this, including a formal 6-month study that we published internally in July, which I'll come back to when we reach the use cases. So with that said, let's dive in. So let me take a quick tour of the room because I've read the registration list. We have buyout and growth firms here, private credit, real estate, energy and infrastructure, secondaries, natural capital, and venture. Different asset classes, but I promise you the same complaint everywhere. Bespoke LP reporting, notice cycles, and the ad hoc queries that are the bane of our lives. So there's 5 parts to today. One, why IR became the most labor-intensive function in the firm. 2, the 4 workflows that we believe AI genuinely pays. 3, the unglamorous project that makes a lot of this work. I'll call it the answer library, if you will. 4, the hard questions, the invented numbers from AI, audit trails when you're involved in using AI, and what you tell your LPs about your use of AI. And 5, at the back end of the session, I'm going to walk through 11 real-world use cases of AI for investor relations to help bring some reality to today's session. Then we'll open up for questions. So that's the structure of the session. So part 1, a little history first, because I think this matters. Nobody designed the investor relations workload that you have today. It's simply accreted. So every new fund, every new vehicle, every side letter, it added a permanent reporting obligation, and not one of them has ever really retired. I want to show you why this function hit the wall before any part of the firm. Because once you see the shape of the problem, you'll see why AI happens to fit it. So 3 numbers to anchor this problem. 70% of GPs named LP reporting as their single biggest operational challenge. Not deal execution, not compliance, reporting. Now, why is that? Because 78% of institutional LPs now treat reporting quality as critical to the re-up decisions. Your reporting has become part of your fundraise, so nobody dares standardize it down. And the result is that the third number, 4 to 6 weeks of team capacity consumed per quarterly cycle per fund vintage, just look at your own firm, multiply it by your vintages, and you see the problem. That's why hiring another associate never fixes this. The workload scales with LP count and bespokeness, and both of those over time only go up. So let me walk you through a typical cycle and stop me if this doesn't sound like your firm. So weeks 1 and 2 is the chase, close, reconcile, administrator numbers versus your internal models versus the valuation memo. Most teams burn 2 to 5 days just getting the figures to agree before a single word is written. Weeks 2 to 4, draft the letter, build the pack, writes the variance commentary, which, let's be honest, is mostly rekeying and copy and pasting from last quarter. Weeks 4 to 6, reformat the same numbers into every LP's bespoke template, run the checks, distribute, and then absorb the follow-up questions. And here's the killer detail at the bottom. The quarter doesn't pause while you do this. Deals still close, capital still gets called. This all runs on top, and it's your senior people doing the checking because they're the only ones who can spot a wrong number. So then there's this, the query that arrives with that warning. I'll read it to you, and I suspect everyone in this room has received this exact one. Quick one, can you send your look-through exposure to European industrials and the net IRR restated since inception? The board pack goes out on Thursday. So one line from an LP. On your side, somebody finds the data, somebody restates it on the LP's preferred basis, and someone senior checks it because a wrong number to an LP isn't a typo, it's a relationship killer. 3 people, 2 systems, most of an afternoon for one line of an email. Now multiply that by your LP count every quarter. And here's the tragedy, 90% of these questions have been answered before by someone at your firm. You just can't find it. Here's the pivot of part one. Look at the 4 characteristics of everything I've just described. It repeats, same cycle every quarter, same notices every call. It's source bound. The right answer already exists in your records. Nobody's asking for creativity here. The format is known in advance, templates, precedents, prior quarters, and it spikes at deadlines, which is exactly when you can't hire. But software scales instantly. So that combination of repetitive, source bound, format known or format understood, deadline spiked, that's precisely the shape of work that modern AI does really well. Which is why across the industry, investor relations and reporting is where firms are seeing the first genuine returns. And adoption has quietly crossed from experiment to normal. Deloitte found 86% of dealmakers now use generative AI somewhere, and most of them started in the last year. So the good news is, if you haven't started, you're not too far behind. So the title question answered honestly. No, we don't believe AI will kill investor relations, but it will kill a particular kind of IR job. And that is investor relations as an assembly line, the copying, the rekeying, the reformatting, the hunting for a number of systems, many of which disagree. That work is going away, and it should. What AI cannot do is the actual job, judgment about what a movement means, the relationship an LP re-ups into, and the accountability. You need a person whose name stands behind every number that leaves the firm. Here's the line I want you to take away from part one. The firms that get this right will not have smaller IR teams. They'll have IR teams that finally do investor relations. So hold that lens for everything in the next 30 minutes. Let's look at part two, which is the practical core of the session as we move into workflows. So 4 workflows in rising order of ambition: onboarding, capital calls and notices, quarterly reporting, and how you handle ad hoc queries. So for each one, I'll show you what embedded AI actually looks like in practice, using our own platform as the worked example. And I'll keep saying this, every capability I show has an equivalent. So you could build or buy elsewhere. The principle here to watch for is AI embedded in the job that somebody already does. It's not a separate tool that you have to remember to visit. Now, before I show you the map that this section follows, let's talk about its provenance, because I promised you candid, and candid means showing the homework. So in the first half of this year, we ran a 6-month study across our global client base. The reality of AI adoption in private capital firms is what we titled it. We published it internally in July. We looked at what firms actually automated, what stalled, and what separated the firms getting measurable value from AI from the ones that were accumulating licenses. And 3 findings shape everything you're about to see. First, adoption concentrates where the work is high volume and text heavy. So notices, reconciliation, screening, not where it's glamorous. Nobody is winning in the AI field by asking AI to pick deals. Secondly, the firm that succeeds adopt job by job and persona by persona. And we'll dive into that in a moment. Never tool by tool. The failure section later will show you the mirror image. Third, and this becomes the backbone of how we build, the same jobs recur at firm after firm after firm. 96 of them that we've identified, grouped under 6 key personas. And that map is what I'll walk you through next. Before the use cases, one framing idea that I believe separates the firms that succeed from the firms that stall. And if you remember one slide from today, make it this one. Do not think in tools, think in jobs. Every firm on this call runs the same 6 personas you can see here: business development, investor relations, fund finance, compliance, portfolio management, and the GP executive as a minimum. There are deal teams and others, of course. And each persona has a short list of jobs to be done: issue the call notice, screen the counterparty, reconcile the portco pack, prepare the board pack, etc. Now, an AI strategy is not a license purchase. It's a map of those jobs with AI embedded into each one where it helps, with a human accountable at the end. We refer to it as the human in the loop. This is exactly how we build our own platform: AI embedded in each persona's workflow rather than a bolt-on chatbot. But the principle holds whatever you buy or build. Start from the job and the tool choice becomes obvious. One additional framing slide before the persona maps that we'll dive into, because it answers the question I get most from non-technical partners. What is the AI actually doing? So if you strip away the jargon and the AI, you're really essentially looking at 9 verbs. And I would argue any serious platform in this space does the same 9. In investor relations, it's scan, it's extract, reconcile, draft, update, monitor, flag, summarize, and escalate. If you read them again, you'll notice that the one verb that's missing is decide. Every chain of verbs on this slide ends at a human. The draft gets reviewed, the flag gets adjudicated, the escalation lands with a named person, and that's by design. It should be by design, whatever you adopt. These 9 verbs are also a practical evaluation tool. When you're evaluating a vendor and they show you a feature, ask which verb it performs inside which job for which persona. If you cannot answer in those terms, you're looking at a demo, not a workflow. So if we look at the first persona, we're going to look at each of them very quickly. We're then going to dive deeply into investor relations. But for business development, it's essentially the fundraise. Approximately 19 jobs from first contact to close commitment. 3 to notice here: prospect scoring. So business development effort concentrates on the likeliest commitments instead of researching every lead by hand. Tailored pitch communications driven by AI, aligned to a prospect strategy, jurisdiction, and ticket size. And pipeline forecasting, a live probability weighted view of the raise against target and the close date. And fundraising is where the repetition lives. So for many GPs, this persona is where AI shows up first. Every job here ends with business development approving before anything reaches a prospect. I'll move through the 6 maps quickly. They're in the follow-up material, which you'll get after this. We'll send you a copy of this recording, as well as a copy of this slide deck. So absorb the shape of these rather than the detail, and we'll dive into the investor relations component following that. If we look at investor relations, we identified 18 key jobs across queries, notices, and reporting. The LP query concierge, notice generation, and the quarterly pack, we cover in depth in the coming slides. A few more worth flagging. Banking detail change verification, that's the fraud control as much as convenience, and it's one of the highest risk movements in LP servicing. And relationship health scoring, which tells you which LP is quietly going cold long before the re-up conversation. We'll take a look at examples of those later in this session. But remember, everything an LP receives still carries that human signature, that human touch, that human in the loop. Very quickly with the remaining personas: fund finance and operations, 11 jobs between your books and your administrators. Reconciliation, NAV, fees, carry, cash matching. This is the smallest map, but one with the highest leverage, because every downstream document, the letter, the notice, the board pack, is only as good as these numbers. For the fund administrators with us today, this persona is the shared workspace, the same 11 jobs seen from the other side of the ledger, which is exactly why manager and admin master data sync is on this list. For compliance and risk, 19 jobs, tied with business development for the largest AI map, which surprises people until they think about how much of compliance is scheduled, repetitive watching, screening and rescreening, FATCA and CRS, UBO mapping, most favored nation clause reviews, SAR drafting, inspection readiness, the list goes on. The design principle from earlier applies to every pill on this slide. AI does the watching tirelessly and on schedule. A named compliance officer does the judging, and the judgment is logged. So done this way, AI doesn't weaken your compliance posture, it becomes evidence of it. Looking quickly at the portfolio manager, 13 jobs from portco data collection through to board meeting prep. The quiet wins here are valuation memos and covenant tracking. The memo drafted from the reconciled record and reviewed by the deal team. The covenant monitored continuously instead of checked at quarter end. And note the first pill here, data collection and validation, because that's the foundation for everything else on this slide. If the portco pack is not tied, it's not tied appropriately in the system, then nothing downstream of it can be trusted. And finally, the GP and executive, 16 jobs of oversight, the KPI command view, the board and investment committee packs, valuation sign-off, LP concentration, dry powder, etc. Now notice that this persona consumes what the other 5 are producing. That's why it comes last. And it is the honest caveat on every AI for executives pitch you'll ever hear. The conversational cross-fund insight only works once the underlying data is owned and reconciled. Build the other 5 personas first, and this one largely builds itself. So that's the full map. 96 jobs, 6 personas. Yours may be smaller and differently shaped. And the exercise of drawing it is the single most useful thing that you can take from today. So now let's look at some first real world examples of 4 workflows worth streamlining with AI for investor relations. We'll cover 15 today. These are the first 4. So workflow 1 is really the easiest. It's onboarding. So think about what happens today. An investor keys the same facts, name, entity, tax status, bank details into a subscription doc or KYC forms or W8s. And often your team rekeys them again on receipt. And the errors that are born there surface months later as a failed distribution, for example. Now, the AI version, information is captured once. Every downstream form pre-fills from the record. Documents the investor uploads are read and checked automatically, and a human reviews only the exceptions. And here's the insight to generalize. The AI is invisible. The investor just experiences a shorter form. That's what embedded means. Workflow 2, capital calls, distributions, notices. The failure mode today isn't the arithmetic, it's the orchestration. Who's been notified, who's funded, who needs a chase, which LP's side letter changes their notice period. In the AI version, notices are drafted from the fund record with allocations computed per LP, validated against the LPA and every side letter before anything goes out. And the follow-ups, the reminders, confirmations, the outstanding balance list, that's tracked automatically by the AI. The machine drafts and tracks, and then a person approves and sends. That division never changes, and we'll formalize that in part 4 of today's session. Workflow 3, and this is a big one for many of you, the quarterly report. So it's assembled from source data instead of copy and paste. The report generates directly from the same records that produced last quarter's, the NAV bridge, capital account movements, portfolio commentary, scaffolded for the KPI data that your portfolio team have already entered. The person who used to spend 2 weeks assembling it now spends 2 days reviewing and improving the narrative. So a major win on that particular workflow. Workflow 4, and this is one audiences love. So if we remember Tuesday's email, can you send me details of any distributions I received this past year on CRE Fund 1? With the disclosed record in one governed place, the system drafts the answer from data already approved for that LP. It shows its sources, A person reads it and presses send, out within minutes. One person, that's minutes, not days. So two rules make this safe rather than reckless. First, the system only draws on what has already been disclosed or approved for that LP, so it can never leak another investor's figures. The second, it answers with citations, so your reviewer sees exactly where each number came from. This is the slide where I'd normally show it live. And so if you'd like to see that in action, at the end of this session, you'll see our details. You can go to our website, book a demo. We'd be delighted to show it to you in real life. Now, I promised you equal honesty about the failures, and there are plenty. And so four patterns that we've watched go wrong across the market. One, the chatbot bolted onto a document pile. You point it at a shared drive full of PDFs, and it answers confidently and inconsistently, and it dies after the first wrong number when you put it in front of an LP. Two, the pilot has no data foundation. If your systems disagree about NAV, AI faithfully automates the disagreement. Garbage in, eloquent garbage out. Three, letting the model free write numbers, using a general purpose tool to draft performance text and letting it produce figures. That's where fabricated numbers come from. And I'll deal with it head on in part four. Four, automating the format instead of the data. Tools that make bespoke templates faster to fill just push the effort downstream. If you take one thing from this slide, none of these failed because the AI was weak. They failed because the data underneath was not governed, which brings me to part three. So part three, and I'll warn you now, this is the least glamorous section of the deck. It's also the highest return project that most IR teams in this room could run this year. So before you buy any AI at all, build the thing the AI will draw on. One approved source-linked library of what your firm has said, disclosed, and computed. That's it. That's why it pays before a model has ever touched it for you to undertake this work. Here's the whole idea on one slide. On the left are your sources, administrator data, the LPA and side letters, valuation memos, past letters, DDQ responses, etc. In the middle, you have what we've generically referred to as the answer library. In other words, every fact and figure that your firm has approved for external use, every entry linked to its source, versioned with an owner, and an as at date. When the auditor restates something, you update one entry, not 40 documents. On the right, everything IR produces. Notices, quarterly letters, DDQ responses, LP replies, becomes a view generated from the library. And that's why the model cannot invent a number. It's never asked to know anything, only to retrieve and assemble from entries that a human has already approved. You'll see this come out now in part four. The questions that stop IR teams cold, and rightly so. How do you keep a model from inventing a number? What's the audit trail? What do you tell an LP who asks whether their data has been near an AI model? And where must human sign off remain absolute? These are the questions that your compliance officer should be asking. And if a vendor can't answer them crisply, that tells you everything you need to know. The fabrication question first, because it's the one that matters most. It's three defenses in order of importance. First, numbers are retrieved, never generated. The model assembles language around figures pulled from the record. It's structurally not allowed to produce a numeral of its own. These are things that are important for you to ensure that if you're deploying, you take these into consideration. Second, every figure carries its citation. The source sits next to the number, so checking it is fast and mechanical. Third, no source, no answer. If the record can't support the question, the system says so and routes to a person. It does not improvise. These are what the industry refers to as guardrails. On the right, how this shows up in practice are those guardrails, firm level rules held in the AI's persistent memory, such as never share one investor's details with another, never send a capital call or wire instruction without explicit human approval. These aren't etiquette, these are system constraints. And here's the message for anybody in this room who's wary of the technology. You don't make AI safe by trusting it. You make it safe by never putting it in a position where its honesty matters. This is the slide people photograph, but we're going to be sending you a copy of this recording so you'll get it there. It's called the sign-off map. Write one for your firm. It's the fastest way to make AI adoption feel safe because it makes explicit what everyone fears is being decided implicitly. In the left column, what AI may draft. The middle, what it checks automatically. And in the right column, where a named human must approve. And that column is absolute. A capital call notice, AI drafts, AI validates against the LPA and side letters, a person approves the send. Wire and bank detail changes, human always, no exceptions, forever. Valuations and performance, AI assembles and cites, but sign off stays with your CFO or valuation committee exactly as it does today. AI changes the effort, not the accountability. The quarterly letter, AI drafts from data, a partner still owns the words, and under every row, the audit trail, who prompted, what was drafted, what changed, who approved, what was sent, all of that should be logged. Now, regulators haven't fully spoken yet, but every direction of travel says the same thing. If you're deploying AI, be able to reconstruct it, understand its decisions. So everything I've spoken about up to this point is about making sure that it doesn't become a black box where you're not fully understanding what's happening. There's a source, there's an action, and there's an output. And there's a human in the loop for all of those at all of those critical points. So here's a question that every investor relation team in this virtual room will face this year, if you haven't already. Has our data been near an AI model? When an LP asks that, they're really asking three things. Is my data leaving your control? Is it training someone else's model? And is a human still accountable? So your answer has three parts, and you should be able to give it without checking with anyone. Where it lives, inside your governed environment, the same boundary as the rest of your systems, never pasted into public tools. What it trains, nothing. Your vendors must be contractually barred from training models on your data, and you should verify that clause exists before you sign anything. As an example, if you use Claude today and you're connecting to it via API, there is a contractual obligation that they will not use your data to train their models. There's also a zero data retention policy on all models below Fable 5. Ask us, ask your vendor, who answers for it? A named person approves everything that reaches an LP and the full trail is logged. That's going to offer comfort to your LPs. And here's the posture point. Say it before you're asked. Put it in your DDQ language now. 47% of LPs say they're actively monitoring how their GPs adopt AI. This is a fundraising question now. A confident, specific answer is a differentiator, whereas a vague one is clearly a red flag. And the final part, where should you expect to be 12 months after starting and how to begin without betting the firm? So let's take a look at 15 proof points. We've looked at 4 already. There's actually 11 that remain. Let's look at each of them individually. So job 5, as we've covered 4 earlier, filing. So nobody, again, in this virtual room was hired to file PDFs. And yet somebody on your team spends hours each week doing exactly that. The objective, every document that arrives gets read, classified, linked to the right LP and the right fund, and filed the moment it lands. That's the objective. The method is what you see here. Bulk upload. The AI identifies what each file is and who it belongs to. It extracts the key fields and it files it against the record. Anything ambiguous can be queued for a person or a human in the loop. The outcome is that the backlog folder dies and search finally works at your firm because everything was filed correctly at the moment it arrived, not 8 months later in a cleanup project. Job number 6, follow through. So every LP meeting produces promises, and at most firms, these promises live in someone's notebook, which is where they go to die. The objective here is every commitment made in a meeting is captured, assigned, and tracked until it's done. Now, here's the method on screen with AI. This is an IR Personas homepage. I want you to notice the shape of what's happening here. It's extracting from notes on the left-hand side that have been captured either, for example, after this call, we're on Zoom. Zoom will send me a copy of this call. If I had agreed actions on this, it would let me know. AI can extract that information from those post-call notes, take those actions, generate those actions, allocate them to the appropriate person in the team, as you see here showing up in meeting actions. This is something which is a core part of our own platform. We do it for virtually every one of our customers. It's a very easy task to do. It's AI driven. Okay, job number 7. So let me start this slide by saying something slightly rude. Copy and paste is not a reporting process, and most of our industry runs on it. Last quarter's letter with the numbers swapped out is how errors are born. The objective here with AI is to assemble the letter and the pack from source data every quarter from scratch automatically. And the method, the report generates from the same records that holds your NAV bridge, your capital accounts, your KPI data. The commentary is scaffolded for a human to own. And here's the line I want you to remember. It's right there at the bottom of the screen. Every figure is cited back to its source record. Click any number and see where it came from. That one property changes review from rederive everything to just track the trail. So 2 weeks of assembly can become 2 days of review. Job number 8 on the fundraising side, collateral. So today someone retypes the PPN into a CMS, over a fortnight, the strategy, the terms, the track record, the team bias, whether it's your legal team, your external counsel, you guys internally, and then it quietly drifts out of date. The objective is that the fund profile, the data room, should be built from the documents you already wrote. The method is on screen. The AI reads the PPM, drafts the entire profile for your data room, and a person reviews it and hits publish. That banner says it. AI built this profile from the PPM. The outcome is collateral is live in hours. And this is the part I love. It can never drift from the source document because it came from that source document. And when the PPM changes, the profile follows. Job number 9, self-service. The cheapest query to answer is the one that never gets sent. So the objective here is every LP has a live permission view of their own position, commitments, calls, distributions, documents around the clock. The method, a feature-rich LP portal driven by AI on the back end. That one portal is fed from the same government governed records as everything else I've shown you, where each investor sees exactly and only what is theirs, with capital calls, their urgency front and center. The outcome here is, what's my unfunded commitment email? That volume collapses. And here's the nice second order effect. The queries that still arrive are the interesting ones, the ones actually worth a human conversation. Job number 10, and this one is personal for me. Today, you find out an LP has gone cold at the re-up meeting. That's roughly a year too late. The objective, know a year early. The method, the AI reads signals you already generate, but nobody has the time to read. They look at portal activity, the tone and frequency of queries, meeting cadence, how quickly capital calls get funded, and scores every relationship. With the reasons shown, there's never a bare number. On screen, a relationship score of 78 is plain to see that you've got a good relationship with this individual. You can look at the underlying data. The action stays entirely human. The score just decides where senior time should go. And when someone tells you AI depersonalizes investor relations, this is your counter. Used properly, it tells your best people exactly where to spend their humanity. Job number 11, meeting prep. We've all done the night before scramble, digging through email threads and the CRM trying to reconstruct where things stand with an investor. The objective is you want to walk into every LP meeting fully briefed for the cost of one click. The method here is a tear sheet that highlights commitments, recent activities, open items, and a plain language summary of where the relationship stands, generated by AI from the record at the moment that you need it. So it's never stale. So 2 hours of prep can become 30 seconds. And your LPs notice, believe me, preparation is the most visible form of respect in this business. And now it's practically free. Quickly then on the remaining jobs, job 12, on the raising side, the pipeline. I'll be blunt. Gut feel is not a pipeline. The objective, senior time, should go to the prospects where the evidence says that they are warm this week. The method is every prospect needs to be scored based on actual engagement, and the score explains itself with stage, target commitment, owner, last touch on every record, compliance checks running alongside. And on screen, a prospect at strong interest at 68, mid pipeline. I mean, that's exactly what you want. The outcome is your Monday pipeline review stops being a meeting about opinions and becomes a meeting about evidence. And no warm prospect ever goes quiet because everybody else thought someone else was on it. Job number 13, you can all relate to this, the can you resend economy that's been created around investor relations. So every quarter, some meaningful fraction of your inbox is LPs asking for documents they've already sent, and it peaks brutally in tax season. So the objective, every statement, notice, and tax form reaches the right LP and stays permanently self-service. The method, documents published to each LP's vault automatically as they're produced. They're classified by type and fund and checked against the LP record before posting. All of that can be done, the vast majority of that rather can be done with AI, with a human in the loop. So the wrong document physically cannot reach the wrong investor. What you see is an LP's view, capital calls, subscription documents, W-9s, all filed and downloadable in the portal. The outcome is the can you resend my Q2 statement goes extinct as an email genre, and tax season stops becoming a support queue. Penultimate job here, portfolio commentary. So today, the asset level paragraphs in your quarterly pack get assembled by someone rereading emails from the deal team and interrupting them when the emails run out. The objective here is commentary is drafted from reconciled asset data, the NAV distributions performance, with a person in the deal team owning the words, or the portfolio management team. The method here is every portfolio asset record carries what we call a signals panel. And the tabs underneath are current and reconciled, and the AI can summarize any figure or draft the asset paragraph straight from them. So on screen, you can see here, Riverside Capital Partners, the details associated with that deal being exposed by AI, those signals being exposed by looking through that financial data, parsing that information so that it's not just machine readable, but human readable to be used by the team as you're preparing that portfolio commentary. And job 15, the last proof, and the one that makes the other 14 trustworthy, is reconciliation. So at most firms, it's an event, 2 to 5 days at the top of every reporting cycle. Under deadline pressure, you're getting your numbers to agree with the administrators, et cetera. We're using an example here of JTC, a fund administrator that we do a lot of work with globally. The objective is to make it a state instead. Your figures and theirs agree continuously. So what you're looking at is a fund record live syncing with JTC. Commitments, calls, NAV, DPI, one set of figures jointly maintained, the portal, the quarterly report, and every AI answer that I've shown you today, all drawn from the same synced record. The outcome then is these reconciliation days at the top of the cycle simply disappear. So there we have it, 15 jobs, one pattern, governed data underneath, AI in the middle, and a person signing at the end. So let's tally it up here, take it home. So what did AI actually kill in those 15 jobs? Well, it killed the assembly line. Rekeying, reformatting, reconciling, chasing, filing, hunting for numbers. And what's untouched actually strengthened. It's judgment, relationships, accountability. So if you go back through the 15 in your head, or when you receive this deck, a person approved everything external every time. And half of those examples made the human more present with LPs, not less. The meeting prep, the churn warnings, the follow through. So my provocative title resolves the same way that the polite version would. The firms that get this right will not have smaller IR teams. They'll have IR teams that can finally do investor relations. But at the deadline, the polite version leaves out. This is a competitive question now, not a philosophical one. So FTI's survey this year already shows AI deployment is creating real separation between firms. Here's the same sequence in a picture. Operating capability on the left, so how fast and reliably a firm answers, reports, reconciles, and compiles. Firms in production compound. So every quarter that data gets cleaner, the answer library gets deeper, the next use case gets cheaper. So firms waiting to stay flat and flat against a compounding competitor, they're effectively in decline. The moment this becomes commercial is brutally specific. An LP will ask two managers the same question. One answers in a day, the other takes 3 weeks. The LP does not experience that as a technology gap. They experience it as an operational quality gap, and it prices it into allocations. So again, if you want to take an image from the session, that's one to take. So let me close with one final pitch. It's the only time I'll really talk about asset class here. If you want to build your own AI capability job by job, do it. The detail will be in the follow-up email, and it genuinely works. It's how the industry should think. But if you actually want the outcome, LP answers in hours, the quarter closed in days, side letters queryable, etc., and a defensible governance story for your next operational due diligence meeting, that outcome already exists on Rails from asset class that have carried 900 funds and $1.2 trillion since 2019. I'd like to encourage you to take 30 minutes with us to go through a demo. Just go to assetclass.com. You'll see our demo booking on the top right of our website. So whether you're in investor relations, GP, an administrator, or family office, you can book it via that site. If you have questions that we haven't answered here, or you don't want to put in the Q&A section, which is what follows next, then please email me directly, ferdy@assetclass.com, and that email address will also be in the pack that gets sent out by our marketing team after today's session. So with that, let's get to questions. The floor is open. So if you click on the Q&A in the Zoom control bar, it may be in the three dots at the end of the bar. If you click on that, you'll see Q&A. So if anybody has any questions, I appreciate we've run slightly over time here, but please feel free to enter them there, and we'll give it a moment just to answer any that you may have. Okay, well, it looks we don't have any questions in the Q&A section here. So with that, I'm going to close this. We will send you a copy of this presentation, a follow-up, a link to book time with ourselves, with myself. Please feel free to reach out. But for today's session, thank you very much. I hope you found it useful, and good luck in your AI journey. We'd love to be part of it if we can. You'll find more details at assetclass.com. Thanks very much. Take care.